Well, the last 1 hour of the week. Back from the brink, breaking the Monday low, then recovering. It's all happening right here. You're with us on Closing Bell. I'm Surabhi Upadhyay and Nigel D'Souza and Mangalam Maloo with me in the house today. Hi, guys.
Well, good afternoon, guys. Just an hour or so and then we're off for the weekend, but it's going to be a busy one. Reliance Industries today, ICICI Bank tomorrow. But just take a look at the markets. Easy peasy, having a snooze fest, right? Markets have not moved too much. It seems that we're bracing for a bit of a time-wise correction, right? Just going by it. And maybe one could argue there are enough triggers to even halt the market. Why should it go to that fresh all-time highs? Are the triggers in place? We need a blockbuster number coming in, say from a Reliance Industries. Coupled with that, maybe the IT index stabilizes. And then, in fact, you have ICICI Bank to fire up the Nifty Bank as well. Otherwise, it's going to be rather hard, I think, to go up because the flows as well are drying up a little bit. That's the FI big flows that we have been seeing in there. I'm looking at the options data, and the broad band that it suggests is the 17,500 on the downside. If you want to play the range, then maybe you have to buy closer to around 17,500, 17,550. Risk reward is favorable out there. But at higher levels, 17,750 around 17,800, maybe in fact we face some bit of resistance. And just take a look at the options data, 17,700 call. Well, out there, the open interest again has seen a big upswing, close to around 70 lakh shares getting added over there. And take a look at the total open interest. It's going towards that 2 crore shares already. Yesterday as well, we saw a fair bit of open interest build up, but towards the end, because it was expiry, there was some unwinding out there. Now, this is a fresh contract that we're talking about. So just keep an eye out on that strike. These call writers, they're bracing for the 17,770 odd level, not breaking. So that's the positioning. But on the downside, the 17,600 put as well is seeing a fair bit of open interest build up. And out there, close to around 45 lakh shares are getting added. Now, these put writers, they're looking at around the 17,570 odd level holding out. How do you get that number? 17,600 put if you're writing it. You're pocketing close to around 70 rupees. So you deduct that from the strike, which is 17,600. Guys, let's hope for some fireworks in the final 60 minutes odd. Otherwise, it's really been lackluster.
You know, I really thought that when the market started making a move for the downside, not for the sake that I'm siding with the bears, I really thought we're getting maybe the sign of some directional moves because we did break the Monday low. But then it's a recovery back. It seems like we're stuck to 17,600 for now.
17,600. You know, I was just looking at some of the numbers. Just last 3 days, we've been tracking the markets, talking about how flat, lackluster it has been. It's there in the numbers. You know, the highs on April 19th, 17,666. The high on April 20th was 17,684. The high today, 17,663.
Yeah.
Virtually unmoved. The lows, you know, up until the Nifty fell in late afternoon, the lows were also pretty much similar. 17,589 was the low. Then it fell all the way to 17,554. But 17,580 day before yesterday was 17,584 and today 17,554. You look at the range as well. You know, the market hasn't moved much. 156 points 4 days ago. Yesterday was close to around 100 points. The previous day was 86 points, and today as well, despite the big dip that we saw, just 109 points. So that's you know, a magic God-given opportunity for all those who are writing options to pocket that premium. The only thing that really stands out for me today, despite the underperformance of the mid-cap index, is that the Nifty, for the second or the third time in a row, has defended that 200-day moving average. Today as well, it briefly fell below that. There was a scare of almost 40 points below that, 17,554. It's recovered right back up and holding on to those levels. So that is something I'll be watching out for.
You know, since the levels aren't making us any wiser, I'm just going to look at stocks right now. Let's pull up first to start off with the Nifty contribution plate. And it beautifully showcases how things are completely netting each other off. So you have a TCS on the upside, you have an ITC on the upside, and then you have an ICICI Bank on the downside. You have a stock like an L&T on the downside. So it's an absolute perfect netting off. Reliance has moved to the green side of the screen now, but that's not really moving the needle on the index too much. But those two big stocks are obviously in focus ahead of earnings, both Reliance as well as ICICI Bank. Just want to pick out some of the mid-cap names because today what's happening is that the mid-cap index is actually down. Yesterday the mid-cap index was flat. There was a lot of buying in individual stocks. Today at the index level, this index has been down right from the morning and it's been underperforming the Nifty. Pull up the advanced decline ratio, and that's something that's changed. Last 4 days of this week, we were talking about a very good market breadth favoring the advances. Today is slightly different. Today, you know, it's been the red line dominating the green right from the morning. I'll pick up some stocks that caught my eye. Some of them, you know, are just moving on their own price and volume momentum, and these are the ones that I'm talking about. Nazara is having a great session today. Its high, I think, was 8.5%. Zomato is up. Delivery is doing better. So there's individual stock buying, and then there are the stocks moving on news. Cyient, for instance, another good number from the mid-cap IT space. Vodafone Idea with Mr. Birla returning to the board. Oberoi Realty is a little curious. I mean, the update looked okay, the fourth quarter update, but maybe there's some profit taking happening. Down about 4.5% on that stock. But it's all about, I think, individual stocks.
Well, that's right. You know, the problem is at least otherwise, if the market has to go through a sideways correction, you're okay, time-wise correction. But you want those mid-caps to continue the party because they started off this fiscal year in style. Well, plenty to talk about. First up, just take a look at the bottom of your screen. I had a chat with Mr. Anil Agarwal, and he said that all the payments due at the parent level will be made, and it seems they're moving in that direction. Vedanta Resources says that it will make the bond payments due later this month. So good news coming in there, but it's not something surprising, because for the last couple of months or so, last 45 days or so, we have been reporting it on the channel, and Mr. Anil Agarwal as well has been quite vocal that he's going to be making all those payments that are due. But what happens from here on is going to be crucial.
But Nigel, also, since we're talking about this, and who better than you to just put this in perspective? It caught my eye yesterday. They're increasing pledges against Hindustan Zinc, right? They're again raising money by pledging more of Hinzinc shares. So obviously the parent entity's cash needs continue.
So I'll tell you what, Surabhi, yet again, in that interview which we had with him, I'd put this question that why are you pledging so much of your shares? And he explained to me that some of this is not pledge against shares. It's you take a loan and this is a top-up. So it doesn't mean that if the stock price falls, it impacts, the pledge gets impacted. It's a top-up on top of that. So it's not a direct share pledge, is what he explained to us, at least at that point of time. But that's correct, what you're saying, because that one deal that they proposed of Hindustan Zinc going ahead and buying Vedanta's international zinc assets, that's on hold as of now, and it's unlikely to go through. We'll be speaking to the management later today and the next couple of days or so. And on Monday, hopefully, we get some clarity on that front as well. But that's about Vedanta and Vedanta Resources. How do you position